Joining me now with more is Jim Bianco, president of Bianco Research. Jim, thank you so much for joining all the way from California this morning. And of course, comments from the Fed chair not helping the markets yesterday, the president weighing in today. How does this set us up for today's session?
Oh, I think it's going to be a challenge because we've got two competing forces at the same time. One, there's a lot of talk about the U.S. potentially going into recession or at a minimum a slowdown in the economy. Even New York Federal Reserve President John Williams is saying that the U.S. economy could grow at less than 1% in 2025, which would not be a very welcome sign. But at the same time, we're talking about higher prices because of tariffs and potentially pushing inflation, if Fed Governor Chris Waller is correct, as high as 5%, which would be one of the higher numbers we've seen outside of 2022. So Jay Powell termed that tension, and that tension is really what's going to be weighing on markets. Are we going to respond to weaker growth by looking for lower interest rates, or are we going to respond to higher inflation looking for higher interest rates? This is the confusion that everybody's trying to get their head around.
So what does this mean for stocks? We still see the S&P off of its low just before the president had reversed his tariff policy and said, buy the dip. Those were his particular words. We've kind of been in a range since then, haven't retested that low just yet. Where could we head from here in stocks?
Oh, I think it's going to be a choppy session as we continue to move forward. The biggest problem that the stock market has is it would like to see lower cost of funding, lower cost of capital in terms of lower interest rates. And at 4.30 on the 10-year yield, 4.3%, we're not talking about 4.1. We're talking about it should be at 3.5 to 3%. That's probably where the market thought it would be given the weakness in the economy. But these higher rates are going to be kind of a drag on the market. And that's what we've seen. You know, there's been times in the last few weeks where I've questioned whether or not the market was trading off of tariffs or if the stock market was trading off of interest rates, because it seemed to be reacting to interest rates just as much. And that's largely because of the high level that rates are right now. So it really all comes down to this whole inflation discussion as to how much are we going to get because of tariffs and how long lasting is it going to be because of tariffs. And the Fed is going to be very cautious about this. They're going to worry about that inflation level, and they're going to want to see that it is not going to be very long lasting, or using the T word, transitory, as they like to call it.
So could we potentially see actual rate hikes this year in the wake of this?
Only if we see signs that the economy is using this rate hike, or using the inflation increase to raise prices across the board. Chairman Powell gave the example again, came up yesterday, that washing machines were tariffed and their prices went up, but then the manufacturers took the advantage of raising the price of dryers, which were not tariffed. So if the attitude is going to be, hey, we're going to have to raise prices on one thing, so raise prices on everything, that could be a problem. We could see rate hikes. If it's only going to be, we're going to raise prices the bare minimum on only those things that are tariffed and nothing else, then I don't think we're going to see rate hikes. And that's really the question we're going to have to see over the next few months.
What are the sectors that you foresee as being more impacted, perhaps, than others when it comes to tariffs?
Well, obviously, the international the big multinational companies that rely on either sales from overseas or product from overseas. And that takes you right to things like the Mag 7 and some of the biggest companies in the New York Stock Exchange. And that's why they've been underperforming the most right now. The other ones that are probably going to be hit are on the other side of the equation, the very small companies that are usually looking for cheap imported parts to finish off their products in order to sell into the U.S. market. They've also been hurt as well, too. Probably who's not going to be hurt from this is anybody who's in a service sector-based economy, because usually you're employing people in the United States to serve other people in the United States in whatever service you have, and you should be largely immune from tariffs.
It's been a little bit mixed, Jim, in terms of what we've been hearing from these companies when it comes to guidance as corporate earnings season has started in just the past week or so. Delta paused its guidance, couldn't guide in this particular environment. Of course, we heard from Jamie Dimon even before that bank reported that he does have concerns about the economy. And then this morning, in fact, United Healthcare actually cutting its guidance quite significantly. So as this earnings season continues on, what do you expect to hear from these executives, and how could that play out in markets?
You know, I think trying to think that they should take a page out of United Airlines' guidance, where they said, here's what we think is going to happen, and here's a scenario of what will happen if we have a recession. So they actually offered two guidances at the same time, because that's kind of the environment we're in right now. There's what I think is going to happen, given what I understand about things. But if the tariffs wind up throwing everything for a loop, here's where I think we might be in that environment as well. And so I think that that's really almost where we're at right now. United Healthcare could cut their guidance, Delta could pull their guidance and stuff. But if we get clarity on tariffs, they're going to come right back with a change in those guidance numbers. So maybe two of them might be better just because of the unique circumstances we're in.
How quickly can corporate America and thus consumers adopt to real-time changes, fast changes that we've seen coming out of the White House when it comes to tariffs?
I think they could adopt to it really fast. The problem is that they constantly change. You know, I'm hoping that by the end of this interview, we don't get yet another change in the tariff outlook right now. But as soon as we get some kind of stability, here's the new rules of the road, whatever they happen to be, I think we can adjust to it very fast. The problem is the rules of the road change almost every day.
Yeah. Jim Bianco, he's the president of Bianco Research, joining us from California. Jim, thanks so much.
Thank you.